Hello, welcome to another session of Fog Accountancy Tutorials. This is the part 3 of our series on single entry and incomplete records, and we are continuing with the conversion method by taking a question and then solving it together. So that is what we are going to do now. Emmanuel Anson, a sole trader, does not keep proper books of accounts. From your investigations, you discovered that he kept a small notebook into which he recorded all cash receipts and payments for the year ended 31st March 2019. So these are his receipts and payment accounts. On the receipt side, we have a balance in hand, cash balance brought forward for the cash at 11,500. We have sales to be 62,000. We have trade debtors to be 32,500. Making a total of 106,000 on the debit side. Now on the credit side, which is the payment side, we have rent and rates to be 12,000. We have postage and telegrams. We have electricity. We have purchases. Trade creditors to be 25,500. We have insurance to be 4,000. We have drawings to be 8,000 Ghana cedis. And then we have sundry expenses to be 3,400. Shop fittings to be 10,000. And then the balance carried down, which is the cash in hand at the end, is 15,300. Then we continue with the other information. We are told that the assets and liabilities at the beginning and at the end of the year were as follows. So we have the opening balances on the left and the closing balances on the right for 31st March 2018 and 2019 respectively for Emmanuel Anson. We have kiosk shop. The opening balance for kiosk shop is 22,500 and the closing balance is 215,000. Shop fittings is 26,000 at the beginning, 33,500 at the end. And then we have stock in trade, opening and closing balances. We have trade debtors, opening and closing, trade creditors, opening and closing. We have rent and rate prepaid. The opening balance for rent and rate prepaid is 1,250 and the closing balance is 1,750. Then we have electricity owings, 500 cedis at the opening, 300 cedis at the end. Then we continue. Discount allowed and discount received for the year were 1,800 Ghana cedis respectively. Then cost of goods returned by to creditors, which is returns outwards, is 1,200 Ghana cedis. Then finally, cost of goods returned by debtors, which is returns inwards, is 1,500 Ghana cedis. You are required to prepare A, income statement for the year ended 31st March 2019 and B, a statement of financial position as at 31st March 2019. So this is the question. It looks a little loaded, but it's not that loaded. It is very much within our reach. We are going to solve this question together. We are going to solve this question, but I want us to follow the same procedure that I gave you. You can do any of them first, but I just want to go by what I did. So the first thing I told you is to find your total sales figure. Okay, now in this question, we've seen that in the receipt and payment account, there was a sales figure there. That is cash sales. And so we need to prepare the debtors control account to ascertain the credit sales as well, so that from there, we'll add the cash sales and the credit sales to find our total sales. And then there was purchases as well in the cash book or receipt and payment account, meaning that there is cash purchases. So we'll prepare the creditors control account as well to find the credit purchases. Now we can add the cash purchases and the credit purchases together to arrive at our total purchases. So that is the first of the workings we are going to do. So let us prepare the debtors control account for Emmanuel Anson in the books of Emmanuel Anson. Okay, so we are preparing the debtors control account. Remember that I told you you can also call it sales ledger control account. Now, the idea is that we are preparing debtors account. And therefore, we are going to put every item that will be in the debtors account will come here. So let's go through the question. It doesn't matter where the information is. It could be in the cash book or receipt and payment account. It could be in the additional information. It could be in the list of balances. The most important thing is that we are going to make sure that every item in this question that should appear in the debtors control account will be there. As simple as that. And so when we look at the question, we should start with the opening balance rather. So we go to the list of balances. You see that there is trade debtors, the opening balance, which is the 31st March 2018. That is the opening balance for the year. 31st December or 31st March 2018 was the closing balance for last year, but it will be the opening for this year. The opening balance over there is 7,000, and then the closing balance is 13,000. So we begin with the opening balance. So balance brought forward for debtors is 7,000, and then the closing balance is 13,000. So I can leave about 3 spaces and then bring the closing balance carried down to be 13,000. Okay, so that is what we are going to do. And then let us go to the question. Once you've brought the opening and closing balances, let us go and look for any other item that will appear in the debtors control account. So going through the cash book, we saw trade debtors on the debit side to be 32,500. Now, the trade debtors on the debit side as 32,500 is the cash received from debtors. Take note, it is on the debit side of the receipt and payment account, which is the cash book. So it is cash received from debtors. And in the control account, cash received from debtors will appear on the credit side. And so we are going to record cash received from debtors. It is on the debit of the cash book, so it would automatically have to appear on the credit of the debtors control account. And so we'll put here cash received from debtors. So cash received to be 32,500 according to the question. I forgot to bring my currency sign. Let me put it up there. And then we continue. In the same receipt and payment account, we are done on the debit side. That is the only thing that relates to the debtors control account. We scan through the credit side as well. So you just have to go through it from end to end to make sure that there is nothing that you have left out from the debtors control account. So we have, okay, I think there is nothing more there. Then we come down to the balances. We have trade debtors. That is what we have already picked as our opening and closing balances. Then we are told down there that discount allowed and discount received for the year. So it means that discount allowed will appear on the credit side of the debtors control account. We know that. So discount allowed is 1,000 according to the question. So we record that as well. Discount allowed 1,000 Ghana cedis. Is there any other thing that will appear in the debtors control account? Yes. We have cost of goods returned by debtors. That is returns inwards. And that will also appear on the credit side. Returns inwards at a value of 1,500 Ghana cedis. So that is what we have for return inwards as well. So there is nothing more that is appearing on the debtors control account. That is why I told you you can leave 3 or 4 spaces in between the balances and then you fill it. So what we have to do now is to add up and try to balance off the account. So when we add that up, definitely the credit side will be bigger than the debit side. It's going to give us a total of 48,000. So that is what we are going to put here. So we are going to have a difference here. And the difference, if you look at the subtraction, the difference is going to be 41,000. And this difference is what we are going to call credit sales. Okay, so I told you from the previous video that when you prepare the debtors control account, you will already be giving your opening and closing balances. That is your balance carried down and the brought down. And so when you are able to put in the entries, the difference will always appear on the debit side. And that is what you call the credit sales. And so if there was no cash sales in this question, this 41,000 credit sales would have gone as our total sales. But because there was cash sales as well, we have to add that to the credit sales figure in order to be able to arrive at our total sales. We have to add that in order to arrive at our credit sales, total sales. And so once we are done with this, we will say total sales. We have to estimate our total sales. Now, the total sales figure, we already had a cash sales figure in the receipt and payment account. That is the sales on the debit side, which is 62,000 Ghana cedis. And we have now established our credit sales from the above control account to be 41,000. And so when we add that up, our total sales will be 103,000 Ghana cedis. This is how to go about the first step. Very simple. Then we look at the second step. We are going to now establish our figure for purchases. And that one too, we have to prepare a creditors control account to find the credit purchases. And then afterwards, we looked through the cash book to see if there was any cash purchases and add that just like we've done here. And so we are going to prepare creditors control account for Emmanuel Anson. Okay, so the same approach. We are going to look for the opening and closing balances. But remember that the creditors account has a credit balance. So in the list of balances, we have the opening balance for trade creditors to be 4,000 and the closing balance to be 5,500. And so we will write our balance brought forward to be 4,000 on the credit side. Then we come to the debit side and we leave some spaces for entries. Balance carried down 5,500. That is what we are going to do now. And then we go through the question just like we did with the debtors control account to see if there are some items in there that should appear in the creditors control account or the normal creditors account. So we move to the receipt and payment account. We see that on the credit side there was trade creditors. Now trade creditors in the cash book or the receipt and payment account simply means that we made payment to creditors. And so that is going to go as cash paid to creditors. And cash paid to creditors will end up at the debit side of the creditors control account because it is at the credit side of the cash book. So corresponding entry should appear on the debit. And so we will say cash paid to creditors. And the amount for cash paid to creditors is 25,500. So we put that on the debit. And then we continue looking through. I think there is nothing more in the receipt and payment account. When we come to the list of balances, the only thing there is what we've already picked, the opening and closing balances. Then we will look at the discount allowed and discount received. Discount allowed relates to the debtors control account, and therefore the discount received of 800 will relate to the creditors control account. And we all know that in the creditors control account, discount received is on the debit side because it's credited in the discount received account. So discount received of 800 Ghana cedis will be credited. And then we proceed. There is also returns, cost of goods returns to creditors. That is 1,200. That is returns outward or purchases returns, 1,200. And that will also appear on the debit as returns outwards. The figure is 1,200. And so, ladies and gentlemen, going through, I think that is these are the only items that will appear in the control account. So we add up to balance of the account. And then when we add up, we realize that the total for the debit side is 33,000. The total for the credit side should also be 33,000. So we have to find the difference to make it balance. The difference will be 29,000, and we will call that credit purchases. That is the difference. So all the time, your difference should appear on the debit credit side. You call it credit purchases, just like we did for the debtors control account. Okay. So now that we have our credit purchases, we have to find the total purchases now. So remember, if the question didn't have any cash purchases, then this figure will be the same as the total purchases. But in this case, there was cash purchases in this question. Now the cash purchases is the purchases figure in the receipt and payment account, as you can see in there. So take note, don't confuse yourself with the cash paid to creditors and the cash purchases. The cash paid to creditors will be given as creditors or trade creditors, but the purchases, the name will be mentioned as purchases. So you have to get the difference very well. So cash purchases from the question is 21,000. So 21,000 for cash purchases, and then our credit purchases will add up at a value of 29,000. So when we are done, we add it up and we have 50,000 as our total purchases. So this is how to go about the control account and finding the figure for sales or purchases. I believe understanding is achieved. So the next thing we have to do now is to look at the expense accounts. If there is any expense to have some accounts on, or there is any other income, and then from there we'll look at the statement of affairs. Then we can start solving the question. So I'm going to clean this board, and I'm going to continue with the accounts for the income and account for the expenses as well, if there is any. Okay, so we are going to prepare the expense account, but it is not every expense that we are going to prepare account for. In this question, there is no income to prepare account for. Like I told you, it's not a common thing to see. But for the expenses, it's very common. And it's not every expense we are going to prepare accounts for. We are only going to prepare accounts for expenses that have opening and closing balances for either prepayment or accruals, or both. Now, looking through, the easiest way to locate your expenses is to go to the credit side of the cash book or the receipt and payments account. When you go there, their rent and rate is an expense. There is postage and telegram is an expense. Electricity is there, it's an expense. Insurance is an expense. Sundry expenses is also there. We are not going to prepare accounts for all of these expenses. But when you go to the list of balances, you will see that the rent and rate has a prepayment for opening and closing. Electricity has an owing for opening and closing. These are the only two we are going to prepare accounts for. The other ones that did not have anything said about them in the opening and closing balances, we are not going to prepare accounts for that. Take note. We are going to pick those figures straight away into our income statement, because it is assumed that that is what we have incurred as we have paid. But because there are opening and closing balances in terms of accrual or prepayment for the rent and rate and the electricity, those are the only two we are going to prepare accounts for. As very simple as that. And so that is what we need to do. So let us begin with the rent and rate account. So we are going to prepare rent and rates account. Now, it is very simple. The account is very simple. Just like I told you. In this question, the rent and rate here is a prepayment. The opening balance being 1,250 and the closing balance being 1,750. I told you that prepayment, the opening balance will begin from here because it's a prepayment. So we'll have balance brought forward for prepayment to be 1,250. And then we are going to have, I'm leaving a space for cash. And then the difference. So a balance carried down, which is also for prepayment, to be 1,750. That is what I told you. If it was an owing, it would have come here. And then the carry down would have been here. And then after putting there the opening and the closing balances, you go into the cash book or the receipt and payment account to see how much was paid for that expense. So when we move there, we'll see that rent and rate was paid for 12,000. That is on the credit side of the receipt and payment account. And because it is on the credit side, it will appear on the debit side as cash or receipt and payment, 12,000. And so that is all for this account. And so we can now close the account and then balance it off. The total will be 13,250, and that should be the same total here. And so the difference is what is going to the income statement, and then we call it profit and loss or income statement. And that is going to be 11,500. This is the actual expense figure that is incurred for the year. And that is what is going into your income statement. So we are done with the rent and rate account. Now, following the same procedure, we are going to prepare the electricity account. So, electricity account. Now, this time, the opening balance for electricity was an owing, and so it's going to begin on the credit side. So balance, but for if it was a prepayment, it would have come to the debit side. Now, mind you that you can also get a question where there will be opening and closing balances for both prepayment and owings for the same question. And when we get to accounts for non-profit making organizations, you will see that we are going to still repeat the same accounts over there. So the opening balance for electricity account, which is an owing, is 500 Ghana cedis. So I put it here, then I leave a space, and then I'll write my balance carried down to be 300. And then I'll go and look for the cash and then come and close it off. And so going into the cash book, the expense paid for electricity is 4,200. It's on the credit side, so it will appear on the debit in the name of cash, 4,200. And when we do so, we can now close off the account. This is as simple as ABC. It is not all the time very complex. So 4,005. So now we have a difference of 4,000. Okay, and that difference will be called the income statement or profit and loss, any way you want to call it. But remember that this is the figure you are going to put as expense for electricity in the income statement. Now, the other expenses that do not have opening and closing balances, we are not going to prepare any accounts for them. So we just pick them directly from the receipt and payment account and we take it to the income statement. That is very easy. So that is that with this. So we don't have any income account. So we prepared only 2 expense accounts in this question. I told you it could be more than 2. The next thing to do is to prepare your statement of affairs to ascertain the opening capital before you can start the main work. And so let us prepare a statement of affairs as our next working. So the first 2 working 1 and 2, this is working 3, this is working 4. So let me call this working 5. So statement, these are all workings anyway. Statement of affairs as at 31st March 2019. Sorry, it's the opening statement of affairs, so 2018. So we'll put our currency sign and then we'll begin with our assets. Remember, I told you there is no need to list the non-current assets separately from the current assets. You may as well combine them, just that you may show superiority in terms of which one will last longer in the business. And so we are going to prepare statements of affairs using the opening balances, using only the opening balances only. So when we go back to the question, there are a list of opening and closing balances for us. We are using only the opening balances to prepare the statement of affairs. And therefore we have kiosk shop. The value for kiosk shop at the beginning is what we are picking, 225,000 Ghana cedis. And then there is shop fittings of 26,000 at the beginning. So shop fittings. Remember, we are using only the opening balances to prepare the statement of affairs. So shop fittings to be 26,000 at the beginning. So that is what we have. And then we have trade debtors, stock in trade and all that. Now, stock in trade is 60,000. So we have stock in trade, inventory, at the beginning to be 60,000. And then we have trade debtors. This is the opening balance for the debtors to be 7,000. That is receivables. So trade debtors or receivables at the beginning to be 7,000, receivable from debtors. And then we have, I think on that list there is nothing more, but let us remember that there are some prepayments. So rent prepaid will come as an asset. So rent and rate prepaid, remember that rent and rate prepaid at the beginning will come as an asset, 1,250. So that should have been all for that. But let us remember that in the receipts and payments account, there was a cash balance. The opening balance for cash is also a balance of assets. It's not on the list. You may forget, but you go there and pick the opening balance for cash, which is also an asset, as 11,500. Is it 11,500? Yes. So the opening balance for your cash is 11,500. So when you pick up all the assets, opening balances of all the assets, then you sum them up. I think the total is 330,750. This is what is going to be the total of our assets at the beginning. And then we can list the liabilities. I told you that the statement of affairs is simply the accounting equation that is expressed in a statement form. And so we are going to take out the liabilities to get the capital at the beginning. So we can list them. Now for the liabilities, we had only two liabilities in this question. That is the balance of trade creditors at the beginning and the electricity owings. And so we have trade creditors, which is the trade payables, to be the opening balance was 4,000. Is it 4,000? Yes, 4,000 Ghana cedis. And then we have electricity owings also as a liability, or electricity accrued, which was 500. So when we add that, we have 4,500 as total liabilities. So the difference will go as capital, which we are going to use to prepare the statement of financial position. And our capital in this case is 326,250. This is our capital, which we are going to use to prepare the statement of financial position. Now, we are done with the main 5 steps that I gave you. But I also told you that you have to be smart and go through. There may be other principles that you need to apply, especially depreciation. So I want you to take note of these depreciation issues. Now, the question didn't mention anything about depreciation. But once you are preparing an income statement and there are assets, closing and opening balances, you should be mindful of depreciation. Now, going back to the list of balances, we could see that the kiosk shop at the beginning was 225,000 Ghana cedis in value. At the end, it's 215. Nothing was said about it, whether we bought or sold any part of that. And so, because the closing balance is lesser than the opening balance, it means that it has fallen in value with a difference of 10,000 Ghana cedis. And that difference is going to be depreciation. As simple as that. This is the revaluation method. And so, working 6, you will see depreciation of kiosk shop. You will say depreciation of kiosk shop. Now, the opening balance was 225,000. The closing balance is 215,000. So you subtract that. The difference is 10,000. You call that depreciation. So nobody will tell you this. The question will not mention it. But it is prudent for you to all the time compare all your non-current assets. Okay, when you compare, the difference will always come as depreciation. Very, very, very important. Except there was a disposal somewhere or an acquisition and something happened. But once it's reducing, it's disposal. If it is increasing, it's likely to be an acquisition. So you have to take note of that. And then the next non-current asset we have is shop fittings. At the beginning, shop fittings was 26,000 in value. But at the end, it has increased to 33,500. Now, if you go through the receipt and payment account, now looking at this straight away with your eye, you will say it's an appreciation. There is no depreciation because the value has gone up from 26,000 to 33,500. But if you go through the receipt and payment account, you will find shop fittings on your credit. It means that we bought additional shop fittings for 10,000. Now, if you have 26,000 at the beginning, let's make this analysis. So you have 26,000 at the beginning. The cash book shows that you have bought an additional 10,000. Then what should be your value? Is it not 36,000 if you add 10,000 to 26,000? So if the value should be 36,000 and at the end of the year you have 33,500, then what has happened? The value has reduced. So it is depreciation. So this comparison, you need to factor the acquisition before you compare. Okay, so to get the depreciation for kiosk shop, depreciation for shop fittings, you have to factor the opening balance. So the balance brought forward is 26,000 and there was acquisition cash of 10,000. So we bought more. So it means our value should be 36,000. So this is the value that we are now going to compare with the closing balance. So you don't have to compare. When there is an acquisition, you don't compare only the opening balance. Add the acquisition to the opening balance before you compare with the closing balance. And so the balance carried down or the closing balance was 33,500. So when we take that out, we are getting a difference of 2,500, which will be our depreciation on the shop fittings. Very simple, very tricky, but Once you have mastered it, I don't think the next question you will meet, if you see anything like this, you will not be able to do it. So this is all for now in terms of the workings. So we are now going to solve the question. The requirement is you are required to prepare the income statement for the year ended 31st March 2019, and the B is a statement of financial position. We have not even gone there. All that we were doing was the workings that is prior to the main requirement. So now that we have exhausted our workings, we are now moving to prepare the income statement and the statement of financial position. I know you may be wondering, this question is very bulky and this topic is difficult. It's not difficult. You just have to follow the 5 principles I have given you, the 5 steps. Once you are done with the 5 steps, the next thing to consider may be depreciation and any other thing that you think may be necessary. Sometimes they will give you a cash book, they will not close it. So you need to recopy everything and prepare the cash book. Other than that, you can't find your closing cash balance to know the cash that is going to the statement of financial position. All these things come as a trick to you, so you need to master that very well. Okay, so we are going to prepare our income statement. I'm going to clean this, and I'm going to start from here to prepare the income statement for Emmanuel Lanson. Okay, so for Emmanuel Lanson, we'll say income statement for the year ended 31st March 2019. Then we'll put our currency signs. So we are going to begin with our sales figure. The sales figure was established from the workings, working 1. Our sales is 103,000 from the workings 1 that we did. That was the total sales we established, 103,000, after we added the credit sales to the cash sales. So now that we have our sales, we have to find out if there was any returns inwards or sales returns, which is going to reduce the figure of sales. Mind you, all that we did was the workings. But when we come to the format, you know the format already for the income statement. So just go by the format. Ask yourself question, is this return inwards? Is there anything in the question that will affect will still come? And so I think there was sales returns or returns inwards. Remember, we use it to prepare the control account for debtors. So the returns inwards figure in the question was 1,500. So when we take that out, our net sales will be 101,500. That will be our net sales. So having established our net sales, then we know that the next thing to focus on is to find the cost of sales. And we find cost of sales. We find cost of sales by starting to calculate from the opening stock. And in the question, there is opening stock. Remember, there was an opening balance for inventory, the stock in trade, and the closing balance for stock in trade, which we use the opening balance for the statement of affairs. And so there was an opening stock. So the opening stock in the question was 60,000. So the opening inventory or the opening stock will go as 60,000. We have it at the opening balances column. Check it again. And then we add our purchases. We add purchases. Now, the purchases also, we calculated that from our workings 2, which is the total purchases that we added the cash purchases to the credit purchases that we established from the control account. And so the purchases will come, if there is no adjustment on purchases, it will come straight to add up to the opening stock. But if there is any adjustment, we'll record it first under the first currency sign, adjust it, and bring the net purchases. And in this question, there was an adjustment. There was returns inwards in the question. And so the purchases that we had from our workings was 50,000. I put it here. And then I'll take out returns outwards. Return outwards was in the question. And there is return outwards of 1,200, which is going to reduce the net purchases. That is the only adjustment we have on purchases. There was no carriage inwards, there is no goods drawings and all that, no freight charges. And so the net purchases figure is going to be 48,800. So we add that. And when we add the opening stock to the net purchase, we are going to have the cost of goods available for sale. The cost of goods available for sale will be 108,800. 108,800. Now, we can subtract our closing stock as per the format. This format You should know it by now. If you don't have this format at your fingertips, I would say you are not even ready for this topic in the first place. Go back to the final account of a sole trader. Go and master that before you come. So the closing stock in the question, the opening balance and the closing balance for inventory or stock was 65,600. So 65,500, sorry. So we subtract that. There was no direct wages, so we can have our cost of sales straight away. And so when we subtract this, the closing stock from the goods available for sale, our cost of sales will be 43,300. 43,300. And that should also be in brackets because we are subtracting from the net sales to find our gross profits. And so per the values we have here, the gross profit will be 58,200. This is going to be our gross profit. And then from the gross profit, we know what to do. We add any other income and we take out expenses. You see, it's very easy when you get here. The difficult part for most students is how to do the workings. And once you've been able to go through that, I'm sure you should be able to handle that now. Now, in this question, there is only one other income, which is the discount received. And so we'll add that. Other income in the question is discount received. And the figure for discount received is 800. And so when we add that, we are going to have 59,000 Ghana cedis as our total income before we take out expenses. This is our total income, 59,000 Ghana cedis. So from here, we take out expenses. So we less expenses. Now with the expenses, I would advise that you go to the workings you did for the expense account. Pick those expense figures first before you come and pick the ones that we didn't have any working on them, so that at least you not forget. So there was workings for rent and rates. And the rent and rate figure for the profit and loss account, we had it to be 11,500. And then there was working for electricity. So rent and rate was working 3, electricity was working 4. And the figure for electricity, we had it to be 4,000 Ghana cedis. And now we can continue to list the other expenses. One easiest place to get your expenses is to go to the credit side of the receipt and payment account. So when we go there, we have postage and telegrams to be 2,600. So postage to be 2,006. I'm going to continue here because it's getting too much down. So let me continue from here. So after the postage and telegram, the next expense that we have there is, okay, we've already dealt with electricity. So insurance. The figure for insurance is 4,000. So insurance is 4,000 Ghana cedis. And then there is sundry expenses of 3,400. So sundry expenses 3,400. So now that we have the sundry expenses, I think we are done with what is on the credit side of the receipt and payment account. But let us remember there was discount allowed as well in the question. Once we have brought discount received as other income, we have to remember to bring discount allowed. And the figure for discount allowed is 1,000. So that should have been all for the expenses. But remember, there was depreciation as well. So let's bring our depreciation for the assets. So depreciation for shop fittings was 10,000 from the workings that we did. And then depreciation for kiosk shop, or I've interchanged it. Sorry, shop fittings was rather 2,500 and kiosk shop's depreciation was 10,000. So when we add that up, our total expenses is going to be 39,000 Ghana cedis. So when we take 39,000 from 59,000, we are going to have 20,000 Ghana cedis as our net profit for the period. So that is how we are going to arrive at our net profit. Then the final thing to do is to prepare your statement of financial position using these figures. So we prepare the statement of financial position. As at 31st March 2019. So we'll begin with our non-current assets quickly. So on that line, we can say costs, accumulated depreciation, and the net book value. So we have only two non-current assets, the kiosk shop and the shop fittings in this question. So kiosk shop and the shop fittings. Now, the kiosk shop had a total cost of 225,000, sorry. And then there was a depreciation of 10,000, giving us a final balance of 215,000. When it comes to the shop fittings, there was 26,000, but we bought an additional 10,000. So the total cost for shop fittings will be 36,000. And then we'll take out the depreciation of 2,005. That will bring us back to the closing balance of 33,500. Now, don't be confused with this asset the way I've done it. You could have ignored this and then just brought the closing balances, because we use the opening balances for the statement of affairs for the beginning to get a capital. But when it comes to the statement of financial position, everything that we are going to do, we are going to use the closing balances. So these two are the closing balances. I'm just using these two to explain how we got that. So if you think this is going to confuse you, you can just quote this. But if you are not fortunate and the marking scheme may include awarding marks for this, then you have lost that. But this is still in the question. These two are in the question, so you can still resort to that. So we add that up, and we are not going to use these totals again, so I can close it off. This will be 161,000. The most important thing is the total for the net book value. That is what we are going to use, and that is going to be 248,500. So now that we are done with the non-current assets, we can move to the current assets. Remember, I repeat that we are using only the closing balances of the assets and liabilities for the statement of financial position. Take note, we are using the closing balances. So for the current assets, we are going to go by the order of liquidity. So our stock in trade was 65,500 for closing balance, and then the trade debtors or the receivables at the end. The receivables figure at the end was 13,000 for the trade debtors. And let us remember that there was rent and rates prepaid. I told you that the expense prepaid is an asset. So rent and rates prepaid will come as a current asset. And that too, we are going to use the closing balance. So the closing balance for rent and rates prepaid is 1,750. And then finally, we can bring our cash balance. But that is going to be the closing cash balance, which is 15,300. That can be found from your receipt and payment account, the closing balance. So now that we have brought our assets, current assets, we add that up and find the total. The total is going to be 95,550. So 95,550. And then from there, we can take out our current liabilities. And so we will say current liabilities. With the current liabilities in this question, there are only two. We have the trade creditors and the electricity owings. So we have trade creditors. We are picking the closing balance, which is 5,500. And there was electricity expense owing, also for 300. So when we add these two, we are going to have 5,800 in brackets. So when we subtract that, we are going to have 94,750 as the working capital. And then when we add that, we are going to have a capital employed of 338,250. This is going to be the capital employed. And then we can finish it up quickly by saying financed by. So with the financed by figures, we just need the capital. And the capital was established in working 5 when we prepared the opening statement of affairs. So the capital figure that we had was 326,250. That is what we have for capital. And then we can less drawings. I don't know if there was any drawings in the question. Yes, there was drawings in the receipt and payment account. So there was drawings of 8,000. So we subtract that and then we add our net profits. Now the net profit is what we had from our income statement. And from the income statement, our net profit was 20,000, if you could remember. Okay, so there was 20,000 net profit. And when we add this, there was no long-term liabilities. And so when we take out the drawings and we add the net profit, we are going to have a total of 338,250, meaning that it has balanced. Okay, this brings us to the end of the part 3 of this single entry and incomplete records session. But we are not done. In our next video, there will be a part 4. And in our next video, which is a part 4, we are going to look at incomplete records and missing figures, where there's cash stolen and you are asked to calculate the amount of cash stolen from a question, or there is goods destroyed by fire, or there is theft, and you are asked to you've been asked to calculate the quantity or the value of the goods that was stolen or destroyed by fire. So these are the other areas that we need to know to complete our knowledge of the single entry and incomplete record system. But until we meet again next time, I would urge you to subscribe to the channel, share this video, let others also have a benefit, comment and let us know your satisfaction, and then we'll meet again another time for the part 4. Thank you so much for watching. It is bye for now.